In today's episode, we're going to talk about why investors continuously make bad decisions. And those bad decisions make them lose money. What is going on that is forcing investors to do the things they do that gets them to the point where they just feel helpless? My guest, Troy Eckard, has been around this industry for a long time, and he is definitely an expert when it comes to energy, oil, gas, and all sorts of things. But today, we're going to get back to the fundamentals. What's going on, everybody? Welcome back to the Money School podcast. And if this is your first time, this podcast is all about money, but not just money. It's about taking back control of your money. It's about you becoming your own bank. It's about you making prudent decisions and understanding how money really works. In today's episode, we're going to talk about why investors continuously make bad decisions. And those bad decisions make them lose money. What is going on that is forcing investors to do the things they do that gets them to the point where they just feel helpless and they just keep losing money? My guest, Troy Eckard, has been around this industry for a long time, and he is definitely an expert when it comes to energy, oil, gas, and all sorts of things. But today we're going to get back to the fundamentals. Troy, welcome back to the show.
Hey, man, thank you so much, Chris, for having me back on. I really appreciate it. It's exciting times out there. Chaos creates opportunity, but it sure makes people nervous. That's for sure.
It does. And, there's a lot of buzz around your industry right now, the oil and gas industry. I mean, obviously, Trump administration came in, and one of the big things they ran on was drill, baby, drill. But unfortunately, I got to tell you, we deal with thousands of investors every day. I know we just had that event out in Texas that you were at. And, I see investors, I watch them from afar, and they are just making blind FOMO-based decisions on what to invest in. There's so many things going on out there, and they're getting blinded by these shiny objects, the returns. It's like, you ever see that Family Guy where Peter's going around, he's like, ooh, piece of candy, ooh, piece of candy, ooh, piece of candy. And they're just grabbing it all, but they don't know anything about half the stuff they're investing in. So if we could just talk a little bit about the fundamentals, maybe bring that back to your industry, the oil and gas industry, but just how can we slow these investors down, get them to start focusing on the things that really matter and making logical-based investment decisions instead of these emotional-based decisions that land them in losing money or in this desperate ploy because they have no liquidity because they're all in on everything. What's your take on this?
Yeah, I think you've hit the nail on the head. Having been around since 1985, I've seen several iterations of changes in the White House, changes in the economy, wars, Gulf War, the whole nine yards. But it's really become almost at a feverish pitch in the last 3 or 4 or 5 years where it's like people are in a race and they're all determined, I've got to do better than my classmates that were in dental school with me. I got to do better than my neighbor. He's got a newer car than me. The FOMO has reached a pinnacle level that common sense, calmness, due diligence are not even in the category anymore. It's like, hey, I heard this is a great deal. Everybody runs to it. Well, that turned out to be a cliff and they all fall off into it. And the other thing that I noticed, which is what you said, the calamity is that they're not really learning their lessons. You're like, hey, the last 3 years I gotten all these over-promoted deals, these sponsored deals, I got Ponzi schemes. And they're like, that really hurt and I lost a third of my net worth. But did you see that other shiny nickel over here? And I'm like, wait a minute, didn't you just find out from the last 3 years that that doesn't work?
That's totally the truth.
You and I work off a fundamental, which is let's look at stuff we can see, touch, kick, and feel. Let's go back to the basic economy, banking, insurance, estate planning, energy, real estate. Let's go back to the basics and let's find out the fundamentals of how we make successful investments. And let's not worry about what somebody else has. You know what I've learned in managing thousands of millionaires in my career? I've probably had 4,000 or 5,000 clients I've known for 30 or 40 years. Here's what I found out. When they get down to the end, nobody puts a meter on their tombstone and says, this guy had a net worth of $22.2 million. And he's richer than the other 5 guys next to him. What really happens is the vultures surround the funeral. It's their kids and family saying, what did he have left for me? And I only point that out from a mortality perspective to say, let's take a step back. Let's calm down. Let's think about what we want as the investor, the family, the father, the grandfather. Let's find what we want. And let's find out what matches our particular characteristic, our estate design, our risk tolerance, our rate of return. and let's slow down and ask questions and listen and go, those four things don't even sound reasonable. So I'm going to eliminate them, not because I don't like them, just not something I choose to do. The most powerful word today, I tell my clients, Chris, is the word no. No, thank you. I appreciate that, but no, I'm not interested. Why not? I don't have to tell you why not. I just don't think it fits me, but good luck to you. And I think that's how you create the calamity and you get it turned off. This thing has a mind of its own. Sorry about that.
You know, it's funny. I read a lot of books from Buffett. I mean, go back. I mean, I learned that Buffett learned all of his stuff from Graham. So I started reading about Graham, and then I started reading a lot on Warren Buffett. I'm right now reading an interesting book, and it's really all about Munger. And one of the things you just said is said many times in this book about how Munger made investment decisions. He made investment decisions very slowly. And this is, you know, Munger and Buffett. Folks, if you don't know those two names, please, like, whatever hole you're in or whatever rock you're under, you need to come out from that, because like these are the best investors of all times, but they are the most boring investors you'll ever meet when you look at how they invest. It's all fundamentals. They just read and they make slow decisions and they say no to almost every single investment opportunity. Imagine Berkshire Hathaway. How many guys and gals and institutions pitch deals to them on just a daily basis? It's got to be overwhelming. And they just calmly say, yeah, they say no to almost everything. But then there's the one deal that they say yes to. And it's probably the one deal that the institutions and the other Wall Street gurus say, what the hell do they see in that? They saw something that everybody else missed because they focused on the one true in investing, and that was the fundamentals, the balance sheet, the profit and loss, the cash flow, and what the current management team missed. And I can tell you something, being part of, you know, a growing business, and this isn't my first rodeo, but I'm at the early stages. I miss a lot today. We're so busy with what we're doing that there's a lot of opportunities in the business. If someone were to just look at it to say, oh, we can improve efficiency here. We can add $1 million, $2 million, $3 million here. We can add this. And that's all they do. They find that one little needle in the haystack that's missing from an entity that is undervalued. And keyword undervalued, folks. Right now in the stock market, good luck finding any single stock that is undervalued, because I don't think there is one right now. But anyway, they find it, and then that's the one they invest in. And it's the one usually that everybody else says that's the dumbest thing. And well, you know, they get it wrong every once in a while, but they're good enough to admit when they get it wrong. They go to their Berkshire Hathaway meeting and they say, guys, we failed you. We failed you, but this is the most important thing they say, Troy, but we learned, and we will never make that mistake again. What you just said about the folks that were like, oh, I just lost a third of my net worth, but look at this thing. They're not learning. Listen, we're all going to lose money investing one time or another, but we got to learn from it so we never make that mistake again. And I think in all the years of you building the business, and you built up just a giant enterprise, you know, with Eckard Enterprises, but you've had to have made a lot of mistakes. Can we just take some time and talk about, like, in your time of investing, not only in yourself and your business, but also outside, what mistakes have you made and how have you learned from them?
Yeah, I think the biggest mistake I made is that for years and years, I felt like that I was kind of the leader of the band. And so it was more the Troy Eckard show versus Eckard Enterprises. And so I was the guy finding the opportunities. I was the one running the due diligence. I was involved in the operation. Then, of course, I put my other hat on. Now I'm the guy training and educating clients and raising the capital. And I did that for 30 years. And I finally looked in the mirror one day and I said, you know, I don't know of a single one-man band that's successful. And although I can do each one of those things, the only way I'm going to elevate the opportunity and elevate the performance and elevate the future growth of my business along with my clients is I got to create myself an atmosphere and a team that gives me the greatest chance of having the best opportunity, the highest due diligence, and of course, the highest value. So I started that in 2017. We decided that we were going to pick an asset class that had virtually no risk. We picked an industry, which is oil and gas I've been in, that would allow us just a wide open runway of opportunity. And then we said, how do we do that in a way that's positive for the investor? Well, let's create the system, and then let's not try to be the smartest guy in the room. Let's go become landlords and partners with the smartest people in the room. So we started buying mineral rights under major billion-dollar oil companies like Exxon and said, Exxon knows the best place in the world to drill. Chevron knows the best place to drill. All these companies know the best place to drill. So Troy finally took away, let's not figure out where Troy thinks is the best place to drill. Let's use the current technology, the current issue, and let's go buy minerals under those companies. Let's partner those companies. And as the saying goes in my industry, just follow the rigs. There's only 562 drilling rigs in this country. The next place those 562 rigs go is the best 562 location in the entire country. So the lesson I learned is humility. You can't be all things to all people. Two, your bandwidth is limited. And if you stretch your bandwidth, what happens is you're doing a lot of things 80% right. So I decided to surround myself with a good team, put people in place, find an asset class or a business model like yourself that has long runway room, and then find capital partners, clients, investors, people who join my organization that have the same kind of mindset. I'm not worried about what happens tomorrow. I'm trying to plan what I want to be doing in 3 years, 5, and 10 years. And I got to tell you, 90+% of the market is all worried about their net worth. They carry their net worth in their pocket. My net worth before lunch was this, and after lunch it was this. I'm like, I couldn't tell you what my net worth is last year because I'm more worried about how I'm planning the future. All that is how I changed my mindset 7 years ago. It was just a complete, hey, I'm starting from ground zero, blank piece of paper. This is what I've done wrong. This is what I'm going to do differently. And now in less than 6 years, we're about $1.1 billion in capital under management, and we're the leading buyer of mineral rights in Oklahoma, et cetera. And we have a super expansive business. The results are cash flow to our clients. And it's just been one of those things where you finally just stop, hold time still, and go, how do I do what I want to do? Change the old me, make the new me, and the results prove itself out. That's a lot of entrepreneurs don't do that. Doctors, dentists, engineers, bankers, they just keep moving, thinking they're going to get a different result. You don't get a different result. It takes a lot of discipline.
Wow, that was well said. I want to pivot real quick, and I want to get deeper into your industry, and that is the oil and gas industry. And, like everybody that looks at oil and gas right now probably thinks in the back of their mind, the Trump administration, drill, baby, drill, the focus, and the doubling down to the U.S. being independent and being, the sole provider of oil to the world, which we have the resources. It's just we've had so much bureaucracy that it's stopped us from actually tapping the resources. And I've been super into this, and I'm a due diligence guy. I always have been, and that slows me down a lot, makes me, not invest in a lot of things. It probably would have made me a lot of money, but I just have to know, like, and understand what I invest in. So I've been reading a lot, about this. And with oil, I made my first oil investment last year, and that was primarily because of tax reasons. And we'll get into that 179 deduction and what's going on with the big, beautiful bill, but whether or not it goes through Senate or not. But I want to talk a little bit about a book I read. And I'll tell you, it was a fun book. It was recommended by a friend of mine out in Dallas. Well, they're up in Arlington, and they were telling me all about all the wealthiest families that came from the oil industry. And they said, you got to read this book called The Big Rich. And the book goes all the way back to, I believe, the early 1900s and kind of follows the wildcatters through and the crazy way they used to drill for oil that hit it, and they'd be out there dancing and oil just falling all over them, make it so fun. But, you go through and it brings you all the way up into current times. But it talked about the Hunt family. And the Hunt family was, for a long time, the wealthiest family in the world, I believe. If I might be wrong about in the world, but definitely in the United States. And they were solely made in oil. But they diversified. And then, multi-generations went by, and, the Hunt kids started really trying to corner the silver market. And there was this wild story about how they did this. And they owned like 60 with their Saudi partners, like 60% of the silver reserve. And then they got pinned because obviously the regulators came in and said, hey, you guys are trying to corner the market, and that was illegal. And anyway, the silver fell. This family was worth, billions and billions and billions of dollars. And they almost went bankrupt by that one mistake because they got into something that they thought they understood. They got led by these speculators and these Wall Street people, and literally they got out of their lane and they almost lost their entire fortune. Now, they didn't. They're still worth billions, but they're nowhere near as wealthy as they were. Now, I took out of that book a lot. I took a lot of mistakes, a lot of these wealthiest Texans, the big four, how they made their wealth in oil, got outside of it, living extravagant lifestyles, invested in businesses they didn't understand, and lost everything, including the Shamrock, I believe, was one of the big hotel, and he lost his ass. With your business in oil, it's a different game than the wildcatters. When you drill, you hit. which fascinates me because after reading that book, it was all speculation. It was like, oh, we got this thing. We think there's oil in the ground. And they just start drilling and then they borrow and they borrow and they borrow and they drill and they go bankrupt. And then maybe one of them hits oil. How do you do it now with such precision that you literally almost never have a miss anymore?
I would liken it to a roadmap. So 20 years ago, probably even before your time, I'd travel around the country and see my clients, and I'd fly on a plane and I'd land in LA. And I have a client that's at 125 North Street B. And I'd get me big old map out. I didn't have a cell phone. And you go, I got to figure out how to navigate on this map in traffic, not get in the wrong neighborhood, and find this 114B address. That's how the oil and gas industry was. It was a geologist who could have been bottom of his class, could have been top of his class. He's going out of all these millions of acres. I think there's a deposit of oil at 7,000 feet at this exact XY coordinate. And we're dealing with antiquated equipment, uneducated rig hands, and we hope we can hit the spot. This is crude oil, right? We hope we can go find this one little 30-acre crude oil, and based on the cost of drilling and the estimated reserves, if we hit it, maybe 1 out of 4 times, we make enough money to cover the other 3 dry. It was highly, highly risky. That's why the federal government said, we're going to get big tax write-offs for high-income earners. If you drill a well, you're going to get 80 to 90% tax write-off because we know you're going to lose your butt 4 out of 5 times, right? Well, what changed it is that underneath all these vertical wells, was the source rock. And the source rock is where the greatest deposit occurred due to oceanic movement and tectonic movement that created basically the desert floor. Think about the desert in Arizona. It's the desert between Phoenix and Tucson. And it was hundreds of feet thick, and it was millions of years of erosion, and all the organic material, the dead plants and animals, landed there as they eroded off the mountains, and then it got compacted and filled. We looked at that as wet concrete. So we never could figure out how to get that great organic material, which was oil and gas, to flow. Well, through technology like Elon Musk and electric cars and NASA and going to Mars, the technology allows us to say, wait a minute, we now can take a rig, drill a well down 1.5 miles, and through the new tools and the computers and the XY coordinates and the triangulation off satellites, we now can guide that drill bit with a computer chip. It can actually go sideways, and we can go 2 to 3 miles out horizontally, almost 10, 12, 15,000 feet, and we can stay within about an 8-foot zone. I mean, so accurate, it's incredible. So we solved the drilling control, driving the car, but now we're drilling into a zone that's 300 to 500 foot thick. So we're not having to worry about finding that one little 7.5-inch paper plate. We now say all we got to do is mechanically get it in the zone, get the best in class when it comes to technology, and we can go drill thousands of wells with virtually 0 dry holes. Other than mechanical problems dealing with Mother Nature, we're no longer worried about whether we are going to make a well or not. Well, that changed the entire evolution of oil and gas, because now it's not about hit or miss. It's more about what's your cost of capital, what's your rate of return. It's all about efficiencies. So our industry in the last 15 years has gone to a manufacturing kind of mentality. It's how many wells can I drill? How many tanks do I buy at a time? How do I line the gravel road so I can just move the rig right down the line and save money? It's all about capital. So that's why you see the majors buying out other majors. Is we're not worried about you having so many wells to drill. We're worried about, we want your assets, because with a 99% accuracy, we're going to make wells. We just know the reserves in the ground are worth a heck of a lot more money in 5 years than they are today. In 10 years, they're worth more than they are today. And in 20 years, it could be double or triple the value. So this has truly changed an entire industry from speculative high risk to, I just want to own tier 1, high quality mineral acres and drilling opportunities in the middle of these basins with the major billion-dollar oil companies as my partner, or as somebody who's invested with or drilling wells in the mineral rights that I own. It's completely changed the dynamics. And that's the thing that I think most investors don't get. Now, don't get me wrong, Chris. Our industry, from the standpoint of sponsors talking to accredited investors to sell them investments, I'd say it's 98% are crooks and liars, cheats and thieves.
Absolutely, 100%.
So the problem is, it's a great industry, but you got such a horrible herd of crooks, liars, cheats, and thieves who present themselves as viable, who destroy the chance for investors to make money in what should be an automatically excellent 98% chance of making money. They destroy it because they're liars, crooks, cheats, and thieves. So the question you and I always have is, how do I know who's the liar? How do I know who the heck is going to tell the truth? I mean, you experience that in your business. Like, this guy's embellishing, this guy's a liar. I think the thing is, it goes back to what we started with, the shiny nickel. And the shiny nickel is not the best website. It's not the guy who used artificial intelligence to create the best language and he rewrites everything with AI, ChatGPT. It's the basics. It's how long you've been doing it. What's your track record? How's your name look? I Googled you. I couldn't find you. If you can't find somebody on the internet these days, that's worse than finding out they were had a DWI 20 years ago. If I can't find you on the internet, it says you have a fake name, false name, you change your name, or you deliberately hit it. These are the fundamentals that make oil and gas so real. It is a tangible, real piece of real estate. It is a 100% consumed by every American, every breathing human being uses a barrel of oil every day. And my partners that I drill with and the tenants that have leased the mineral rights you and I own are the richest oil companies in the world. I'm never going to miss a payment. I'm never not going to get paid. I get paid first from the richest oil companies in the world. I don't know how to do any better than that.
It's just freaking awesome. And
your real estate business lives and dies by the network and the connections that you make. I mean, after all, your network, well, it's your net worth. That's what you always heard, right? If that's an area where you desire improvement, well, Private Money Club, it's for you. PMC saves you precious time and money by bringing the real estate world, well, right to you, right in the palm of your hand. So get in on the action, like so many others have, by going to privatemoneyclub.com and sign up.
And you're right. Your industry is filled with crooks, but I love that you just said use some logic. Like, do a Google search, look up the name. How long have they been doing this? And I always refer everything like we do, but I'm gonna kind of talk about your industry. You find somebody that's talking about oil and gas and they're pitching this deal at some mastermind or something like that. Great. Ask them how long they've been doing it, and they say, oh, we've been doing this 5 years. Great. Let me ask you this. If you had a heart attack right now, would you want to go to the doc that just got out of school, literally just got out of school, and you ask him, hey, how many of these surgeries have you done with, in what precision? He says, well, you're my first. You want to be that guy?
No.
No way. I want to find the guy that's in my neighborhood who's done thousands of heart surgeries, that is the only thing he does day in and day out, and he operates in a 99.9% success rate.
Correct.
That's the guy I want operating on my heart. But that's the same thing with Eckard. Like, I want the operator that has that success path, that has that history, that literally I can call a few people that have invested with you and they're all like, they're the best. Their customer service is absolutely one of the best I've ever heard. And that matters today because since COVID, we've lost customer service.
Yeah.
Computers and robots and AI have come in and everybody's trying to cost cut, but they're cost cutting the wrong thing because every human being wants to speak to a human being that is knowledgeable. I don't want to pick the phone up and talk to somebody that barely speaks English. No disrespect to that, but I want to talk to somebody that speaks my language and literally understands my problem and can help me solve it. We have lost that. Your business has not. I don't know how many of my clients work with you and your company, but you know what? Every one of them, I could pick the phone up and they would speak volumes about you, your company, and how you handle their needs, concerns, and they love you. That speaks volumes.
What happened, Chris, is that in 1998 to 1999, you used to have stockbrokers and financial advisors, and you didn't have the internet. It wasn't robust. You just didn't have cell phones. You didn't have the material, right? So you had to try on the human factor of experience, expertise. Like, how long you been around? Well, I've been in the business for 20 years. Okay, you've seen several stock market crashes and rises, so you had a sense of awareness and a sense of expertise. Well, I've said for 25 years, the problem is the investor community got Google smart. Chris talks about infinity banking, right? Troy talks about oil and gas. Well, let me Google it. How do I find a deal better than Eckard? How do I get in the deal? So what's happening is they stopped relying on expertise and experience. They stopped relying on guys like you and I who read 24 hours a day, absorbing, and we're experts in our business. And they say, well, I think I can do it with this guy. He's only been doing it for 5 years, but I Googled it. It's okay. So I've told clients for 25 years, your Google smartness has cost you 50% of your net worth, at least. Because even ChatGPT only takes what it finds online and gathers that to compress your answer. Well, if 90% of what's online is garbage or promoted by crooks, liars, cheats, and thieves, what you're getting is an answer that is going to go toward crooks, liars, cheats, and thieves. So it's garbage in, garbage out. So I think the thing that I'm suggesting to my partners today is, why don't you take a step back, be more patient, sit down with Chris, sit down with Troy, talk to clients and say, I hear what you're saying. The arm waving's pretty, but I didn't come for a dance. I came for facts. So let's talk about the facts. Who are you? How long you been around? What's your track record? What's your business plan? How do you plan on managing my money? Let's go back to 1997, not because we want to, but because that's when decisions were made without the shiny nickel. It was based on fundamentals. I've said this for the last 20 years. People can only lie for 8 hours. Let's say you and I are on a trip and there's another guy with it. He's trying to sell something. And we talk to him in the morning. We go fishing out in the Gulf. And all of a sudden, by that afternoon, we start asking the same question. And all of a sudden, the answer is slightly different. And this answer is a little different. This answer is a little different. I go, because people can only really lie 8 hours. And so after 8 hours, you find out that was the facade. Here's the truth. So I don't want to invest with somebody with only 5 years experience. Have you ever seen a crash? Really, we haven't had a crash since 2008. So we're 17 years without having really an obliteration.
38 years old or younger have never felt the impact of the actual recession. That is freaky to me.
When I talk about 2008, you might as well be talking about World War II. People look at me like, what the hell's 2008? They don't even know. I'm like, okay, that shows my age, but 17 years has gone by very quickly. But the question is, it's like saying in California, well, the earthquake was 1981. It's coming again. It's just whether you're prepared or not. So today, with so many failed masterminds, so many failed groups that really were nothing more than a slaughterhouse to bring in bad sponsors, create all these fees, give bad advice. I mean, they've been hammered. Today, you got to go back and say, I want to sit down with Chris and talk about infinity banking. I want to talk about infinite banking. I want to talk about energy with Eckard. I want to collaborate with two guys who've been around a long time, have thousands of clients who can say, I've done that, been there, I trust them. I don't want any more green bananas. I want to see a banana's been around a while that's ripe because I know it's tested time.
Yes.
And I think that's what oil and gas does. I mean, back to your point about the book you read, I always say today, all the big analysts and consultants out there, Wood Mackenzie, Reuters, they're like, well, today this is what the Permian Basin is going to do, this is what oil's going to do. I go, so what I do, I go back and say, well, what did they say in 2050? What did they say in 2010? What did they say in 2005 about the same thing? And it's like they say completely opposite things. The shale play we're having today, which has saved the United States on energy, in 2010, they said it was all non-commercial, was not even economically viable to recover. Today, they're screaming that the Permian Basin is running out of oil because it's reached its peak. You're the same goober who said in 2010 that shale would never work. It was not viable. Yet here we are, 8 million barrels a day of production. We base their energy independent of the U.S. So I think fundamentally what investors who listen to you and I should be thinking about is, let me take the data in and like a filter, decide what makes the greatest logical sense. Then let me ask questions, logical questions, and get those answers. And if I can get the answers logical, then I'll step forward to say, now maybe show me your idea. Show me what you want me to do next. It's a process. Everything is a process, like getting married. First you have a date. Do we even like each other? Then I have a second date. Are you the same person I had on the first date, or are you different the second date? Well, you're nice and now you're a psycho. I mean, a marriage is a process, but then it becomes a lifetime contract. Well, investing's the same way. When you give somebody your money, you think of the thousands of hours you had to put in to earn that money, and you're going to haphazardly give it to somebody with a shiny nickel without doing your homework. Well, think of all the time away from your kids and your family and your wife and all the things you could be doing to make that money. If you really put it on a piece of paper, you would go, I would never give that person $100,000 based on how hard I had to work. But you did. And you didn't know what the heck you own. So today, I think more than anything with what President Trump is doing, he is supporting natural resources. He's supporting fossil fuels. He says wind and solar, they've always been uneconomical nonsense. He's going back to saying we're going to take back our country and we're going to put all of our people back to work, get them off the couch, stop eating Cheetos, go to work. Let's put policies in place, tax procedures. I don't care if him and Elon Musk are pissing each other's leg. That's just typical billionaires and high egos, right? But the fundamental of what he's saying is we're going to come back and become our own internal mechanism of growth through the economy explosion. And he's going to give us the opportunity to do things like provide better returns on our money through fixed income assets, lower our debt, lower the interest rate on our debt, go back to fossil fuels, support oil and gas in this country, drill, baby, drill. Well, the one thing I want to point to your audience and probably yourself that's really, really important, oil and gas is not as much about supply and demand as it is monetary policy. So right now, the one thing that's driving oil is almost at $65 a barrel today. One thing that's driving oil prices is not necessarily supply and demand like everybody's put in the media. It's about the value of the dollar. And the dollar value is going down. And when it goes down, oil price is going to go the opposite direction. And so I just want to make sure your audience understands truly oil and gas supply is monetary decision. You pay us $100 a barrel, we haven't reached the peak in the Permian Basin. We can add another 2 to 4 million barrels a day. We're only delivering the product based on what you're willing to pay us. There are massive reserves all around the world that at $150 a barrel, we could almost double the global output. But at $65 a barrel, here's all you're going to get. You're not working for minimum wage, neither am I. So the oil industry says, President Trump, we love your policy. We don't work for free. We're going to drill just what we're drilling. We're going to deliver what we need, keep our companies moving, make money for our shareholders, make money for our investors. But drill, baby, drill is more like survive, baby, survive until he understands monetarily, we got to have $80 a barrel. It's going to go back to $80 a barrel. So this is where investors that you talk to and I talk to, we saw each other 2 weeks ago. I could look around your crowd and over half the people in your room were not even focused on what you were saying. Here you've come to this conference, you're sitting in front of Chris. Chris is giving his expertise and they're twiddling thumbs or running out getting a cup of coffee and thinking, if I'm going to listen to an expert, I want to take notes like crazy and I want to learn how you were tying all those pieces of puzzle together that made sense. Well, energy is the same way. If you want to know why energy is running the U.S. and why the president of the United States, the strongest leader in the world, said we are going back to drill, baby, drill because the internal oil and gas is the way this country is going to grow. Hello, I better learn about oil and gas. I better invest in oil and gas. That's just the way, that's a simple mindset that I have as just a guy from South Texas. Just follow the bouncing ball. It's not that hard.
Well, it's interesting being an ex-Wall Street guy, and now I can't call myself an economist, but I read just about every piece of economic news that comes out there. And I will tell you this, and there's nothing that can really support factually what I'm about to say, but with all the stuff I read, the Trump administration is devaluing the dollar, and you can see it happening in real time. But it's number one, probably for what you just said, which that was something I just learned. I knew that it wasn't just supply, because OPEC would then just continue to just pump oil. But, correct. But it's about the dollar valuation. The dollar's been so strong, and now it's being devalued. But it's being devalued probably one for oil independence, okay? But number two, the tariffs. A lot of people think tariffs increase price. Go back in history one time and tell me where tariffs increase prices for people, because it isn't happening, because inflation is still coming down, contrary to what every bullshit thing you hear in the news is saying. Prices are still remaining relatively level. Some are going up, but that is not solely due to tariffs. But the other thing with tariffs that people need to understand is it's basically between the supplier and the buyer, okay? And the other thing, it's very much about the price of the dollar. So if he devalues the dollar and the other countries' currencies are on the rise and going up in price, well, that pretty much balances out any increase in the tariff, but that still means the United States wins and gets the revenue from this. So it is a win-win. It is bringing the economics back to the U.S., against the grain, I guess, against what most people think. And the media is the worst enemy because they don't even know what the hell they're talking about, but they're doing that. Now, I want to pivot real quick to this big, beautiful bill, the biggest thing that's been in the news, the reason Elon and Trump are in a pissing match, whether it's staged or real, who the hell cares? Like you said, I can't even hear it again. But nonetheless, this big, beautiful bill, number one, puts money back in taxpayers' pockets, but it adds to the deficit. Troy, I'm just going to tell you what I know, and I know this pretty well because I've studied the hell out of it. There will never be a president that decreases the deficit. It's almost physically impossible because you've got every single person out there in the United States who are all voters, okay? So they need the vote, but everybody has what they have, right? We have things that we want, like you got Medicare, you got Medicaid for seniors, you got the veterans, you got the poor who get all the subsidies and this food stamps and all the things that, I grew up on with my mom. You got all these things, and none of those individuals are willing to give one damn thing up. They want more, and they don't want to give up anything. And if they do, they bitch, moan, and cry, and the media gets a hold of it and says, oh, bad Trump. He's trying to take away things from seniors. He's trying to take away things from the veterans. But then he comes out with a tax bill that puts $5,000 in every American's pocket in tax savings, and more for some, less for others, but nonetheless, $5,000 is the average. And it's going to add to the deficit. Biden added $4.2 trillion to the deficit, and this new one adds like $3 trillion, but yet they're stopping it and they're saying, no. I get it. I get why that's a concern, but you know what? The number one way the U.S. is going to come out of this is not by decreasing the deficit. That will never happen. Just get that out of your head that they're going to decrease the deficit. The best way is to decrease the ratio of the debt to GDP ratio. And that can only be done by increasing productivity and production in the United States of America. And that is exactly what Trump's policies are doing to a T. That is how we did it after World War II. We went from 120 debt to GDP down to 30 over 30 years. And it wasn't because the deficit went down, it went up. It was because the ratio of debt to GDP changed.
All you got to do, Chris, is look at China. So China was broke in 1991, 92. And what they decided is that we're never going to go anywhere because we're basically a poor country. Well, what do we have? What's the resource we have? We have labor. We have people. We've got 1 billion people. So what we can do is we can work cheaper and we can outwork everybody 5-to-1 ratio to the U.S. So let's put the people to work. So they borrowed out the wazoo. They didn't have any money. They borrowed. And what they did was they expanded their country and expanded their economy by saying, we're going to just grow it so large, we'll outrun the money that we borrow. So I'm going to take a furniture manufacturer. I'm a furniture manufacturer. I'm making couches. I'm making a ton of couches. And I have a lot of people at furniture stores saying, I need more couches. I'm like, man, I can't, man. I'm maxed out. I've got loans at the bank, but I need a whole new building. I need a whole new assembly line. I got to go borrow 50% of what I've already borrowed, but I'm going to get a second facility. And the aggregation of that growth means I can double, quadruple my product. I firmly believe what President Trump is the right direction. I understand you've got to spend more to make more. What Elon did with Doge was he said, let's at least stop the hole in the ship and the waste, so that at least makes what we do have more beneficial. I firmly believe we are going to see the most robust economy in the next 20 to 40 years we've ever seen in the history of the United States. I believe we got to add more to the deficit to get that extra building for that furniture manufacturer so we can grow. And I think the tariffs are more about two things. I think he's using the tariffs to negotiate with these other countries who need to buy our T-bills and our notes at a lower interest rate. He's going to do a trade-off. And I think what he's doing is using the tariffs to say, now, American buyer, you get to make a choice. Instead of always buying this cheap trinket from Asia, you can buy a cheap trinket from an American producer, either equal to or less than the price. He's changing the buyer's preference. And by changing the preference, it means we're going to internally grow the economy and the external growth is going to go outbound. Now, I like everything I'm saying and that you just said for one reason. That's much higher demand for fossil fuels in the United States. We already consume twice what we produce. 5 million barrels a day of the 13 million barrels a day that we produce, we can't even refine. We don't have the refine. We actually are shipping our beautiful oil overseas. Yep. So if we drill, baby, drill, that's great, but we're going to be exporting it. But what it does, it creates a balance. And that balance means we're not buying oil from Russia and other countries that don't like us. So from my view and your view, the way we both are talking is we're expecting this great surge in economic growth, GDP. We're going to outrun the deficit. We're going to pay off the deficit. And how are we going to do that? We're going to do the same thing that happened after Ronald Reagan. He grew the economy, and he handed it over to Bill Clinton. And Bill Clinton says, I'm the first president to have a balanced budget. You only did that because of Bush.
He had a tailwind, because he had a tailwind. That's it.
So what we're going to see is an enormous increase in consumption and demand for products all internally, which means our dollar is going to go down. He wants it lower so other people come here to shop. He wants us to have a lower dollar so he can refinance the debt. He's almost trying to act like or pretend we have a recession. So it creates a lower value, get Powell to lower the rate to save the real estate market, to save the cost of capital. At the same time, he's saying, but we're going to grow 300%. Well, I'm in a great position. I am buying mineral assets now. We have a bid out today. It's almost 50% of the price being asked last year. 50%. There's no buyers. So I get a chance to buy tremendous assets today at just bottom basement prices, knowing that the next year's expectation is we're looking at probably a massive growth in demand for fossil fuels over the next 5 or 10 years. So if you stop worrying about the chaos, stop looking about the shiny nickels and go back to the fundamentals, I'm going to buy the fundamental. If you did the stock market and peeled it apart, you coming from Wall Street, you look at it, I'm like, that is worse than throwing money on a roulette table in Vegas. You're just hoping today your number's up because the market fundamentals say that thing should be down to about 32,000 or below on the Dow right now.
Absolutely, absolutely. You're the second person today that said that.
It's obvious to an old guy like me as it is. I'm like, I'm not touching with a 10-foot pole. I own 2 stocks, Procter & Gamble and Exxon. I've owned it for years, put it in my kid and my grandkids' account. It just doesn't make sense. So you and I, through all of our podcasts or all the things we do, the people we meet in person, we just got to keep saying the message, which is calm, fundamentals, listen to reality, listen to people with proven backgrounds and track record, avoid the shiny nickels. And there's a lot of wolves hanging around the hen house trying to pick you off one by one. The only way you don't do that is you say no. The answer is, I'm not going to do it until you give me facts. Show me your track record. Show me your antecedents. How long have you been around? Absent that, I wish you luck. The answer is no.
Yeah, and
That's it.
I'll go public and say this, folks. I don't own a single stock. And I know a lot about the Wall Street, and I don't have one red cent of any of my money or my family's money in the stock market. I own a whole lot of T-bills and a lot of long-term treasury bonds. I got a whole lot of whole life insurance. And this year, last year and this year, I'm doubling down on oil. I'm doubling down on minerals because it's very simple to understand where we're headed because it's been printed in every newspaper and every headline for over a year already. And if you don't know that's coming, what we've already confirmed, then you are literally putting your head under a rock, or you are just getting really bad advice. And one last thing I got to say that I love, and it goes right into what you're saying with demand. If this bill goes through, the days of all these subsidies for full electric cars, which nobody wanted unless there was a subsidy. I'm sorry, the dealerships, I know them all. They don't want electric cars. They're trying to push those things off their lot because nobody wants them. They were subsidized to hell for getting people to buy them. Now, tariffs and this big beautiful tax bill will cut that. We'll be back to gas-powered cars, which most people want, or hybrids like the Prius. And the other thing too, with all the tariffs, I can't believe people don't know what happened in the 80s. I remember it. I was a kid. It was those commercials of Japan dropping cars on the United States of America. U.S. said no, put tariffs on Japan, said you can't sell your cars here unless you pay this huge tariff. What did Japan do? Said, okay, we'll build all of our cars in the U.S.
Bingo.
Folks, have you ever thought about all the Japanese car manufacturers and all the cars you see on the road and how many jobs that created for you, your family, your grandparents, and every American? How many high-paying jobs, union jobs, high-wage jobs, employee benefit jobs? That's Japanese products being made here. You don't think that's going to happen with every one of these companies that Trump is placing a tariff on? You are
100%.
out of your mind, and you are absolutely living a big lie. The same thing is going to happen that it did back in the 80s, and it's going to benefit exactly what you do, Troy. So I'm so thankful I had you on today. Thank you for being part of our community and everything you do. And folks, listen, if you want to get a hold of Troy and his team, Troy, how did they reach out to you and learn about oil and minerals?
I think the best thing to do is just go to EckardEnterprises.com. When you get on that site, we've created the only alternative asset app called Eckard Insights. You can sign up. You don't have to tell us you're a millionaire. You can literally sign up and say, I just want education. You sign up. We approve you. Hundreds of videos, training, education, information. If you decide, hey, I like what I see, maybe I want to consider looking at an open project, then you can actually say, hey, I'd like to look at one. I'm accredited, et cetera. But the thing I want to point out, the same way you do your business, we always say it's an invitation to learn more. It's an invitation to consider our company. We're not high pressured. We want the best for you. And if the energy is best for you, go to EckardEnterprise.com, learn about it, educate it. We have salaried wealth managers and get on the phone and talk about what's better for you. But at the end of the day, the chaos is only like this highway outside my building. It's just a lot of noise. And if you can put that noise aside by saying, I have a very simple, acute ear for preservation of capital, cash flow, safety, things like a see, touch, kick, and feel, all that outside noise doesn't bother you. I think stop watching the shiny nickel, listen to people like Chris, myself, follow people who truly have their money where their mouth is. And what you'll find at the end of the day is you're going to make much wiser decisions going forward.
Love it, folks. Thank you so much for joining us. Hopefully you learned a thing. Hopefully it changed your viewpoint on the shiny nickel. And we're going to put that in the description. So if you want to learn more about Eckard Enterprises and what Troy does, check the description out and click the link, get on his website, and get on the phone with, and I picked up on this, one of his salaried salespeople. Notice he didn't say commissioned. Little things matter, folks. Thanks for joining us for this episode of Money School Podcast. We will see you next time.